All right, let's talk a little Tesla now. Shares actually rising today, 2.3%, which is really a surprise. No one expected that. The company continued slashing prices on several vehicle models in China. Reuters calculations indicate Tesla cut prices by 13.5% on its China Model 3 and 10% on its Model Y.
And in today's episode of Bet You Didn't See That Coming, Tesla cuts prices in China and many other areas as well, and Tesla stock is up on a day that most of the stock market gets absolutely destroyed. Surprise, surprise, Tesla stock remaining super volatile and very unpredictable. Kind of reminds me of a tweet I posted less than a day ago. At this rate, if Tesla announced 2 new factories in 2023, the stock would crash both times because there's no demand. Why are they adding capacity? If Tesla announced a $25,000 car, the stock would crash because there's no demand for the current vehicles. Or as peace, EV demand is slowing. This tweet is a little esoteric, let me explain. The point I was making here is that Tesla stock, its behavior, completely detached from reality and entirely unpredictable. We've seen a great example of this today. You would think, given the fear, uncertainty, the panic around Tesla at this point in time, Tesla cutting prices would cause huge panic. Oh my god, there's actually no demand, oh my god. Amazingly, however, when most stocks today got absolutely crushed, Tesla up after announcing price cuts. Now, in fairness, pre-market, the stock was down as much as 4.5%+, but it closed the day up a few percent. And this is why I continue to point out that my brain is far too small to be attempting to time the market. I'd rather just buy and hold, long-term time horizon. Got a pretty good feeling in 10 years' time Tesla's going to be worth a lot more than it is today, so I just buy and I hold. If my brain was bigger, I might think, oh, price cuts, the market's going to panic, time to short Tesla stock. And I would have got absolutely fucking wrecked. And a quick heads up to my Patreon supporters, submissions are now open for the next exclusive Q&A. No topics are off limits, so get your questions in now. Submissions won't be open for long.
Shares of Tesla hitting a new 52-week low today on reports of additional price cuts in China.
Well, that didn't age well. A few hours later and Tesla stock ends up significantly up for the day.
And the company announced it's slashing prices for its Model 3 and Model Y vehicles to shore up demand. Now, the Model 3 will now be priced at just over $33,000, while the Model Y will be slashed 24% from the price it sold for just 4 months ago. Now, this marks the second price cut in just 3 months, as the EV maker looks to compete with homegrown rivals like BYD. And this comes just one day after the latest data showed that Tesla's December sales fell to more than 55,000 cars in China. That's the lowest in 5 months.
Tesla cut the prices in a different stories that we're tracking here. Tesla cut the prices of its Model 3 and Model Y cars in China by over 10% after deliveries of its China-made vehicles plunged in December. This is the EV maker's second time in less than 3 months that it's slashing prices. Now, a few things have taken place within that time frame. Number one is the production, and of course we got some of those production and delivery numbers. I think Tesla is really just looking for people to take delivery. That's one issue. But then additionally, it's a number of the credits that are going to continue to be rolled out too, and the extension of some of those credits, that makes financing even more possible for some people. So now that you've got another cut on top of the credits, on top of just trying to get people to take delivery, that's spelling out some serious issues that investors might be paying close attention to here on the day, which is why shares are moving lower.
Maybe Paul Meeks was onto something. Tesla hitting $29 a share. He came on, obviously we're not making a stock call here, but look, now the problem here with this is this reaction in the market to Tesla pre-market has nothing to do with what Elon Musk is doing on Twitter. This is purely fundamentals as it pertains to Tesla, them cutting prices, probably putting their margins at risk in a key market like a China. We're also seeing pressure on a NIO and an XPeng, those Tesla China rivals. And I would be more concerned about this market reaction than necessarily whatever is happening over there at Twitter, at least for right now, because that's what the stock's trading off of.
I mean, it might have nothing to do with Twitter. It might have to do with the short interest in the stock, which has been climbing, right? That is something that could potentially be exacerbating this, that there is definitely a financial interest on the part of some investors for the stock to continue to go down. That said, obviously, there's also the fundamental case of what's going on here for the company now cutting prices for the second time on these China vehicles in what is a really substantial market. By the way, they also cut prices in Japan by 10%, so that's something to consider too. It's not just in China. And one more point here that my pal Tom Hearden made over on Twitter is that the man who oversaw China and still oversees China, by the way, his purview was just extended. That's Tom Zhu, who just got a promotion, is now overseeing North America as well after what we're seeing in China. It's kind of an interesting choice here to expand that person's role.
This is a wonderful example of perception versus reality. Now, I don't want to single out the anchor here, so we'll just talk in general terms. But generally speaking, a lot of the folks in the mainstream finance media tend to have zero idea what they're talking about. Not just when it comes to Tesla, I just mean in general. Facts. This is a classic example of someone who just doesn't fucking get it, yet still opens their mouth. For those who don't know, Tom Zhu is Tesla's global vice president and was the general manager for Tesla China. Tesla's execution in China has been near flawless. A foreign automaker builds a plant in record time, ramps production in record time, makes industry-leading profit margins. The Shanghai-produced electric vehicles, Tesla's margins in China are higher than anywhere else in the world, sells through all production. They're now at an annualized rate of about 1 million vehicles per year. This has now become Tesla's main export hub. Tesla Shanghai, Tesla China has been a stunning story of epic success. That isn't, however, the perception that many of the adults in the mainstream media have, and also a lot of dopey, and I mean super dopey investors at this point in time who for some reason believe there's issues with demand. This is really a great example of small brain syndrome. Now, I don't mean to be so demeaning, but I just don't know how else to describe it. If you have a small brain and thinking hurts, you don't think too much, you don't think too deeply. Oh, the prices went down, that must mean Tesla China's the failure. I've covered this a million times. With new incentives phasing in and out, there's going to be a lot of temporary price changes just to keep moving through production. It's in Tesla's best interest, if they've produced a ton of vehicles and they know customers are going to delay orders, to cut prices and get those things sold. In addition, it's also in Tesla's best interest to start eating the lunch of other automotive manufacturers in China and elsewhere. If there's a strategic opportunity, if a new vehicle is released at a price point that's maybe 15-20% below a Tesla with comparable performance, and Tesla notices that a lot of consumers are opting for this vehicle, you know what they're going to do, assuming they can continue to ramp up production. They'll cut prices and eat their fucking lunch. They have huge pricing power, insane profit margins. And going back to this comment from the anchor here, the undertones, the implications of what she was saying there is, well, basically, Tesla China is a huge catastrophe. I don't know why the fuck they'd be promoting the dickhead who fucked Tesla China up so bad. Once again, perception versus reality.
And so now this is a profit margin story as well. And any hit to the free cash flow for a company like Tesla too, going into a recession where there is fear around some of the car sales and moving through some of the produced vehicles, I think investors trying to get ahead of that.
And there's no stock buyback.
I mean,
there's no
I
stock
think
buyback
that is a TBD because I think Musk has said that their operating efficiencies have improved on the vehicles, but I don't know to what extent. But so that to me is something we still need some more information on.
Julie has redeemed herself by saying something that's reasonable. This is actually super important. Tesla themselves, with these price cuts, announced the primary reason for them was they've been able to lower their costs. Now, by how much, we don't know. I know I repeat myself a lot, but it's because I hear so many dumb things a lot, I just kind of have to keep saying the same shit. The cost for Tesla to produce the same vehicles will continue to decline over time. As they ramp up production, they benefit from economies of scale. We saw huge temporary inflation in terms of prices for materials, especially for batteries. These costs are now coming down. And as Tesla continues to benefit from economies of scale as they ramp production and innovate further in terms of manufacturing and eventually integrate the 4680 structural battery pack into their vehicles, their costs come down considerably. If Tesla's costs to produce a vehicle are coming down, they can also reduce their prices while maintaining the same profit margin. This doesn't mean they will. They might reduce prices more than their savings, meaning lower margins, or they might reduce prices less than their cost savings, meaning higher margins. But this is such an important piece of the story that a lot of investors just don't seem to get. The cost for Tesla to produce its vehicles over time will continue to trend down precipitously. My best guess is that by the end of this decade, Tesla's going to be able to make a vehicle comparable to the 3 and Y for about half as much as it costs them today. And their master plan clearly states their goal is to drive the price of their vehicles down so more consumers can afford them. I mean, hello, their mission is to accelerate the world's transition to sustainable energy. If consumers can't afford to buy their vehicles because Tesla can't afford to produce them for a price low enough that consumers can afford, it doesn't work. And this again will highlight examples of small brain syndrome. Small brain syndrome equals price went down, therefore no demand, therefore profits collapsing. But if one actually does some thinking, if their cost to manufacture comes down, their prices can come down and their margins can still stay at the same level. They could even increase. There's a lot of moving parts here that must be considered. This is why I so condescendingly use the term small brain syndrome. If you have a small brain and it hurts to think, you'll just go, well, there's only one factor I need to think about here. There's only one moving part. I only need to consider this one thing, and that obviously means this. I'm seeing a lot of small brain syndrome currently in the Tesla community.
It continues to be a demand issue. Everyone for quite some time was saying it was strictly an Elon Musk distraction Twitter issue. Clearly that is not the case. There is at the heart of this a demand issue, in particular in China.
Gosh, I have absolutely no idea why that clip was strategically inserted right after me describing small brain syndrome and drawing a single conclusion based on a single data point, single factor analysis rather than multi-factor analysis. That definitely wasn't an example of exactly what I was referring to.
Let's check in with Dan Ives, Managing Director of Equity Research at Wedbush. Tesla bull, but recent critic of Elon's choice of how he uses his time. So Dan, welcome back. Thanks for being here. Happy New Year. What do you make of the other tech companies joining Tesla lower? Do you still think it's Elon's fault?
Look, I mean, right now, tech's enemy number one on Wall Street. I mean, the New York City cab driver's bearish on tech, and I think going into earnings over the coming weeks, there's just fear around what guidance and what the demand picture is going to look like. Now, clearly, Tesla has had its specific issues, as we've talked about many times, in terms of Musk and Twitter, and I think that has been a huge overhang. But ultimately, really, the worry now is around demand.
In fairness to Dan, there are concerns around demand. However, they're ill-founded and will not age well. I can't believe I'm talking to you guys in early 2023. Global EV adoption now. Last year, 13% of all new vehicles sold globally were electric. A couple of years ago, it was 1%. I cannot believe, with production increasing, costs plummeting, lots of options for consumers to choose between, ever-improving technology, an increasing gap between the value a gas vehicle represents versus an EV. I cannot believe anyone today out loud is actually saying there are any concerns about EV demand, period. I just can't believe it. Yet here we are. So while what Dan says is true, the so-called concerns around demand are ill-founded and won't age well, but they do exist. Hence the huge disconnect in the stock market, in my opinion.
And you're seeing tech and multiples. Bears are going to continue to press it because anytime investors have bought the dip, they've been proven wrong. Now, that said, I believe it's as underowned as I've seen tech since 09 and maybe 01. And we continue to think a lot of the bad news baked in. I think earnings is actually going to be more of a catalyst than a negative as we go into the end of January.
And why is that? What do you think we're going to find out?
I think whisper numbers right now are 10 to 12% below street models. So once you get the cuts, I actually think that's actually where, institutionally speaking, you could start to seriously buy these stocks. The worries now is that you don't want to buy these names ahead of what could be a rip the Band-Aid off type quarter. But with that said, I think you're seeing headcount cuts. I think we're seeing a demand picture, at least from what we see, that is a lot better than I think is being priced into these stocks.
Spot on. Dan gets it. He recognizes that the concerns around demand aren't actually aligned with reality.
And I think that's sort of the important thing, is that if you're able to look through this, I continue to view these as generational in terms of over the next 4 or 5 years in terms of where I view tech stocks. But right now, obviously it's Fed driven. Risk assets are basically all getting thrown out the window, and obviously you talk about Tesla, Microsoft, Apple, and others. And Oliver, look, right now, it's very easy to yell fire in a crowded theater here, going into earnings.
12-month expectations, you think Tesla could trade back to 175, which would basically be reclaiming the lost ground of the past month, where it does look like there has been some additional selling here relative to broad tech because perhaps of what's happening with Elon's dedication to Twitter. I mean, obviously the 40% decline in just a month, there's something going on here that's specific to Tesla. So I get that logic that is pretty compelling, that if you just take that part out, then we basically get to your target. On the flip side, I look at a lot of stocks that have the same growth characteristics as Tesla, the same boom of the last year, just technically speaking on the chart. And a lot of these things are back to pre-COVID levels. So how come it's not that simple for Tesla? How come we don't just look at this and go, everything that went up during that period goes down to pre-COVID? For Tesla, that's $50.
Yeah, my argument there would be 2.5% of U.S. autos are EV today. And I believe that, you could argue that it takes maybe another year or two, but I believe that's going to 10% by 2025, 20% at least by the end of the decade.
Holy flying spaghetti monster. Did he just say that out loud? He's thinking maybe 20+% of all new vehicles sold in the US at the end of the decade will be electric? Dan, brother. What he says will technically be true. More than 20% of vehicles sold in the US will be electric in 2030. Try more than 80%. Please remind me, guys, in a decade, come back and clip this. The poor guy. 20%. He must be rounding down, so maybe he thinks at best maybe 24, 25%. Otherwise, he would have said 30%, right? Just yesterday, I featured a guy who's quite bullish on Tesla who thinks they're going to sell 5 million EVs globally in 2030. And now we have Dan, Green Tidal Wave, catchphrase Ives here. He thinks 7 years from now, new sales of EVs in the US will represent 20+% of the vehicle market. Not 30 plus, not 40, not 50, not 60, not 70, not 80. I'm looking forward to some barbecue Dan Ives in a few years' time.
So we're talking about one of the most transformational growth trends that we've seen to the automotive industry. That's just in the US, let alone globally. That's why, like, when I look at Tesla, there's much more growth ahead of it than behind it. So when I look now at a company that I still believe could do $4.50, $5 plus earnings power this year, you start to kind of run rate that out in a normalized environment. To me, it's just a compelling risk reward. But look, with that said, haters are all out. You know, obviously bonfire situation, that's so easy right here. I just think we sit here a year from now and there's a stock a lot closer to 200 than 100.
How do the competitors on the legacy side factor in right now, Dan? I mean, to your point, there's a lot more favoritism being given to those. Not a ton. I mean, the charts for Ford and GM have been hit too, just not as hard as Tesla. But then we see the numbers are more well received when they're just doing single-digit top-line sales on a global basis, where Tesla's doing 40% or so. What does that say about the market's priorities for taking market share versus kind of having market share? Because the taking market share is Tesla's story, but Ford and GM might argue that they just might need to hold on to it. And if we go into recession, it might be easier to hold on than to take.
First of all, I held to a higher standard, right, in terms of Tesla, which trades as a disruptive technology player, not an automotive company. Now, obviously, slowly starting to trade more as an automotive. But my view, it's not a zero-sum game. I mean, I'm bullish on GM. I think this could actually be a massive renaissance of growth for them on EVs, especially on the Ultium side going 2023. So I don't view this as it's a loss market share to GM. I do believe competition's clearly increasing for GM. You see it in Europe, you see what's happening in China, which also just speaks to our overarching theme. We want Musk as pilot on the plane at Tesla and not distracted with anything else. Clearly it's SpaceX and everything, but we want him to name a CEO of Twitter by earnings date end of January. I think that is a huge, very important piece here to the story, because I think $40 to $60 on the low end is Musk Twitter-driven sell-off, non-fundamental.
Dan, to the last point here, one of the things I've found particularly confusing about his commentary is the conviction that there's real recession risk, but then kind of talking about how Tesla will be immune from it. Is there like a GDP level? Is there like a macro data point that throws this view out the window? If there's a big recession event, does that change the analysis?
Yeah, I think baked into tech stocks here is basically a mild recession. If you start to get black swan, hard recession, look, then obviously all bets are off the table, right? So I think that's what's starting to get baked into a lot of these names. And look, and then obviously if you get some sort of softer landing, Fed pivots, then obviously it's off to the races. But that's sort of my view. And then, of course, Tesla so much relies on China.
Speaking of a recession, I thought these tweets were very much worth sharing. This is from Sam Kouris of ARK Invest. Tesla's margins, superior drivetrain efficiency, and low battery costs should make it one of the best positioned to weather any cyclical slowdown for autos. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers. Indeed. Now, Kathy Wood has a few comments on this as well. Tesla's goal has been to drive prices down. Oh, Kathy, how dare you refer to Tesla's secret master plan? That's private information. We're not meant to talk out loud about how their goal is to drive their prices down, because that goes against the narrative. How dare she say this? And increase EV adoption. At Investor Day, Elon could announce a step function drop in pricing, much like he did for the Model 3, to around $25,000 for the next generation electric vehicle. And by the way, ladies and gentlemen, this will happen. I don't know when, but she is right. This is already up Tesla's sleeve. It's going to be fucking huge, but they're not going to announce it until they're ready, until it makes sense. And as I've said, Tesla will try to make the gap, the time delay between announcement of this $25,000-ish vehicle, maybe $30,000 with inflation, and the first deliveries as short as possible. Otherwise, consumers who are thinking of a Model 3 a while will go, fuck it, I'll just save the 10 grand and buy this instead. It's basically the same vehicle. Gas-powered vehicles boomed at the $25,000 price point. Based on the historical demand response to a $25,000 price point in gas-powered vehicles, ARK's forecast that EVs will scale from around 8.5 million in 2022 to 60 million units which is 75% of the market during the next 5 years, could be too conservative. Now, just want to make sure that sank in. ARK's own estimate that EVs could account for 60 million new vehicles sold in 5 years could be conservative. Remember, earlier in this video, we heard Dan Ives out loud say that he thinks maybe 20+% of new vehicles sold in the US in 2030 will be electric. Somebody's comments won't age well, and I don't think they'll be Kathy's. And finally, from Kathy, moreover, in our view, Tesla remains 3 to 4 plus years ahead of the competition in battery costs and is in a world of its own in chip design and data assets for autonomous mobility. Think Apple chip designs for smartphones vis-a-vis Nokia, Motorola, Ericsson and BlackBerry. New world. Talk about a contrast. We hear some of the geniuses in the finance media. Clearly, some concerns around demand in China. Dan Ives embarrassing himself with an absurdly low estimate for EV adoption in the US by 2030. In fairness, he did say over 20%, or words to those effect, but bro, he didn't say over 40, he didn't say over 50, he didn't say over 60, he said over 20. Clearly the guy's got no idea how fast this transition's happening, yet he's still bullish on Tesla and EVs overall. And in contrast, Kathy Wood there, saying that ARK's own predictions of 60 million new electric vehicles sold in 5 years, that'll be 2027, could be conservative. She could be right. And as we saw today, Tesla stock remains volatile and entirely unpredictable. With the amount of FUD, fear, panic, and uncertainty in the stock market, you'd imagine after price cuts in China and many other regions as well, the stock market might react poorly. Instead, Tesla stock up on a day where most other stocks get crushed. Again, going back to the main point here, as I said earlier, my brain is far too small to try and anticipate how the stock market will react, in particular what Tesla stock will do over a short or medium time frame. So instead of trying to outsmart the market, because I ain't that smart, I'm looking 10 years into the future and thinking, what do I think Tesla will be worth then? What numbers will they do then? How many vehicles? What were their margins, average selling price, blah, blah, blah. Then I'm looking back to today and going, what's the gap between what Tesla stock's currently selling for and what I believe it's going to be worth at X point in the future? If there's a large gap, which there is, I continue to buy with every spare cent. But hey, that's just me. And don't forget to get your questions in for the latest exclusive Q&A on Patreon. No topics are off limits. Submissions won't be open for long, so if you have a question, now's the time to get it in. See you over on Patreon. Love ya.